Hello, chart watchers, and welcome to this Monday, July 15th, Market Watchers live show with your host, Erin Swenlett, and guest co-host, Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. Let's go ahead and take a look. Actually, Mary Ellen, let me bring you in. How are you doing today?
Oh, I'm doing wonderful for a
Excellent.
Monday. No, it's actually all systems go here. Excited to get things going and share.
Excellent. I'm going to go ahead and do our little market update, and we'll come right back for the upcoming schedule. But right now, as you can see, as far as the market is going, kind of a dull day. I mean, we are down a little bit here. We're seeing the Dow down about almost 21 points. We've got the S&P 500 down a little over 3 points. NASDAQ down about 1 point now. It is mostly unchanged, actually. New York Stock Exchange currently is looking like a drop of 0.08%. S&P 400 pulling back a bit here. Doesn't look too good. Russell 2000, not a good day either. So mid and small caps getting hurt. Russell 2000 down 0.64%. Treasury yields are lower, currently at 2.096%. VIX is rising a little bit here. I found that interesting. We're starting to see a rise despite what we were looking at last week. UUP has been moving up. It looks like it's taking a little bit of that back. It is down 2 cents at 26.21. Gold is down on the day 28 cents for GLD. USO started in positive territory, but is now down almost 1%. TLT rising nicely up 54 cents. All right, now I'm going to get you in, Mary Ellen. It's hard when Tom's gone and trying to get all of it to put together the right way sometimes.
You bet.
I'm glad to have you.
Yes.
We've been seeing a lot of each other.
I'm thinking, yes, but all working out quite well, I would say. An interesting week this week with earnings season ramping up, so lots.
Absolutely. And of course, we will be doing that earnings spotlight. But let's go ahead. Mary Ellen, do you want to do the upcoming schedule?
You bet. Yeah, let's take a look at what we have coming up this week. On Wednesday, Martin Pring will be here visiting us, followed by Julius de Kempenaer on Thursday. And then next week is Relative Strength Week. You're not going to want to miss this because, as you can imagine, the focus will be on relative strength, relative outperformance. On Monday, Mark Chaikin will be here. Wednesday, Gaddis Rose. And then, of course, Thursday, Arthur Hill and Julius de Kempenaer next week. That's going to be a great week.
Absolutely. As far as today, Monday setups, like we said, earnings spotlight will be following that, and lots of interesting stocks there. 10 and 10. First symbol is going to be Service Now with symbol NOW now. Sentiment update will end the show. I can't wait to show you those beautiful charts, but let's go ahead and get started with technical news and headlines. And we are going to start right off with our economic reports. There was one today, and that was the Empire State Index. It was 4.3 versus a minus 8.6 from last week. So that is making economists feeling pretty good today. They were expecting a reading actually of 0.5 according to Econo Day, and we're looking at a pretty nice upside there. The gain, reverses that steep fall, as I was saying, and, improving conditions are always a good thing. So the next up are those key earnings reports. I will be bringing up those charts shortly. But what we see right now is Citigroup did report. They came in higher than expected, 183 versus 178. Organigram Holdings, OGI, reported 0 earnings versus they thought we were going to see 2 cents in earnings, but we didn't even get that. So it was a surprise, but we will look at that chart. I think it's reacting interestingly. After the close, right now we've got JB Hunt will be coming up, and Grupo Televisa with the symbol TV. Coming up tomorrow morning, I thought I'd give you a little bit of a preview. We're going to have Johnson & Johnson, JP Morgan, Goldman Sachs, Wells Fargo. Looks like a lot of the banks are reporting and will be reporting. So we will be taking a look at some of those, but mostly we'll do those in the earnings spotlight. So let's go ahead. I'm going to get started with some of those charts. Let's look at, let's start off with Citigroup. Bring you in here. Hang on. All righty.
And it's,
yep, got to get that screen up with the right chart. And right now I have Citigroup. Here we go. Thank you for your patience. Okay, so what I'm looking at right now, and actually I don't want this weekly chart, I'm going to use my chart style, my handy dandy chart styles, and get my MarketWatchers one up here. And there we go. So with Citi, we did report better than expected earnings, but as you can see, we're down even 0.4%. Think that's pretty interesting. PMO is still, it's decelerating, but as you can see, it is still rising at this point. In that thumbnail, it's a little bit easier to see. What I do find interesting going into earnings, we did see kind of a ramp up here on the OBV, and we do have rising bottoms at this point between the beginning of last week to the midweek of last week. I'm sorry, 2 weeks ago to the midweek of last week. And, we've got this drop intraday. It's testing that 20-day EMA. I think that's very interesting. We're looking at a possible rebound here to the upside, but not quite there yet. Want to see a breakout for Citibank. And I'm not seeing that yet. And the scooter is starting to lose a little bit of momentum here, but still a pretty decent one, as you can see. The other one that did report, like I said, we'll go ahead and look at OGI. There we are, our organogram. This is in the healthcare pharmaceuticals area. We do not have a scooter defined for this one, but wow, talk about an ugly OBV and volume pattern here. This one is clearly under a lot of distribution. You really don't want to see those drops below the 200-day EMA. I mean, it was already bad enough when we got that 20, 50-day negative crossover. That was pretty good warning, but you know what? We had even more warning back here when the PMO at the end of May logged a sell signal and started to increase the margin between it and its signal line. We were already starting to get some information from that PMO. If you had gotten out right in here, you would have avoided today's drop and certainly last Friday's drop. But when we see a close beneath the 200-day EMA and trading now below the 200 EMA, I wouldn't be expecting much going on here. And, really, it's very interesting. As I said, we've got a 3.12% rise on an earnings report that says they made no earnings. So I found that pretty interesting, but things are not always as they seem. The main thing I want to point out, though, is this OBV distribution. Even if we get a nice close to the upside, we really would need a lot of volume here to bring that OBV back up toward those previous bottoms that we were seeing over here. Just as a little refresher, OBV is calculated in a very simple manner, which is part of the reason I use it, because I like just knowing right off the bat what I'm looking at. And what you do is if you have a down day like you see last Friday, you take all of the volume and subtract it from the reading. So you can see we had 4 days of very high negative volume. And what did that do to the OBV? It took it way down, way fast. So I was going to show you that one. Let's look at JB Hunt. I think I was going to, yes, that's what I want to look at, because we're not going to look at that in the earnings spotlight. JB Hunt. They are reporting after the bell. And looking at their chart, it looks fairly good. It's interesting, though, to see that almost 1% pullback. But you know what? We got that break above that 50-day EMA, and it's pulling back, but it's holding on to the 50-day EMA. And I think that's very positive. And look at that PMO. It's starting to make that move back up. So you like those breakouts. We always talk about getting the breakouts, but a lot of times, and it's usually a good thing to wait for that pullback, because a lot of times you're going to get those breakouts, and then the investors are going to grab a little bit of those profits, and then you're generally going to see a little bit of a pullback toward that breakout point. But when I look at JB Hunt, we are getting that nice buy signal. We're still continuing on the PMO to the upside, but I always take caution when I do an entry with a 50-day EMA that far below the 200-day EMA. So while I look at this chart and think of good things, I would have to say that when you're going to that upside, you want to still be considerate of the fact that you are in a bear market configuration. JB Hunt has been in a decline since that cross of the 5,200, the death cross as they call it. And it just, it had that nice move up in December, but overall the stock has trended lower. So if you were in back here, you wouldn't have even benefited that much from that big move to the upside. The other one I was going to look at is TV. There we go. And PMO buy signal, like the way that's looking, going up to the upside. And, if you look in the thumbnail, I think it's a little more obvious, the price rise that we've been seeing. Really nice rising trend going on here for TV. It'll be interesting to see what they report as their earnings. But with this kind of a move, and you could see back on Wednesday, huge rally move. I suspect everybody's expecting good earnings here. All right, let's go ahead. I want to go onto our dashboard and show you our sector summary. I want to check up on what the rotation is, and then I'm going to give you our scooter mover of the day. Currently, as far as rotation, we're seeing healthcare and REITs and staples. These are three fairly defensive areas. Certainly Staples is, and they are leading to the upside right now. That really tells me that market makers, investors in general are feeling a bit, again, we go sentiment, are feeling more bearish despite some of the price rises we're seeing in some of the indexes. Now, let's go ahead. We will go back to our dashboard, and I am going to show you the scooter mover of the day. I went ahead and did my scooter technical rankings. You can look at the top 10. You can look at the top the low 10, but I wanted to concentrate on the top up. I thought that IONS had a very interesting chart that I wanted to share with you. And there's that scooter move to the upside. Recommend, I didn't put it on the chart, but I recommend you do check out the scooter definition, because the scooter is a ranking that is heavily leaning, it heavily oh my gosh, Mary Ellen, it's just
I hear you.
It is certainly leaning to the upside. We're getting that move to the upside, but intermediate to long term is what that scooter is telling you. PMO buy signal in place here, despite mostly sideways movement. That PMO has been slowly rising, telling us something might be building under the surface. I'd like to see a little bit better volume, certainly on today's move. This breakout move is really nice. We're getting above that 50-day EMA for the first time, really in a serious way since, well, goodness, we'd have to go back here to the end of April. So I think this is looking really good as a biotech. I like it. So watch for that breakout to continue. And the rounded bottom here, you can see it's sort of a cup a little bit there, but we're breaking out above those tops. I really like that. This is your scooter mover of the day.
And I have to say, that was a very attractive chart. Quite beautiful. Yeah, so we're going to move on here. Upgrades and downgrades. As usual, a lot of action out there on the street with these analysts giving their opinions on stocks. I'm showing you initially an intraday chart. We're going to begin with upgrades. This is Crocs, the footwear. They were initially renowned for their plastic shoes with holes in them, but they've evolved quite a bit since then. But what I wanted to point out here is this big gap up. The stock's up almost 6%. So again, this is your intraday chart, and those same metrics still work. I'm going to revert to the daily and weekly with the others, but I did want to point out to you how you can still use these RSI metrics and MACD, both trending upward, stock above, your nice simple moving averages. This is what you want to be on the lookout for, that uptrend reversal. But for now, Croc's certainly responding quite constructively to that upgrade. And we can take a look at the daily price chart here. And then I can go ahead and move on because we certainly do have a lot. Intraday looks interesting, but take a look at Crocs on the daily. It's broken up now above these simple shorter term moving averages. Could easily find resistance here at 24. It's trading now at 22. Nice, certainly a 10% advance if you were to play that. RSI is positive, MACD just turning positive. So we could be reversing this downtrend. Let's go ahead and move on to some of the other stocks that were upgraded today. The next one is Deere, certainly a well-known farm equipment company. And we can see it's another one that's responding, but not quite as much. The stock pardon me, had a very, very significant advance here during the month of June, pulled back very orderly in response to this big move. And now we are reversing back up. I would look for the stock to break out at about 167. Your other metrics are all positive, RSI and MACD in positive territory. Another upgrade here that we can take a look at is EAT. This is Brinker, a large restaurant company. They own a number of different franchises. The stock is up about 1% on the upgrade. We're not out of the woods yet. You can see this downtrend that began in the beginning of the year very firmly in place. Stock attempting to reverse. The break above the 50 is certainly a good start, but it's still going to have work to do. We're at 40. Next area of resistance could be that 43. Another upgrade that we can look at is Gilead. Nice to see a biotech stock being upgraded. And this particular stock is up almost 3%. It's bouncing around here, not an attractive chart from my work. Too much noise here. The RSI and MACD are positive, but certainly it does still have more work to do to really create a trend. MRVL is the last upgrade that we can take a quick look at. And this is Marvell Technologies. This is actually a very attractive chart. A lot of these semiconductor stocks doing really quite well. It's gapping up 2.5% on the news, breaking out. Very, very attractive. RSI, MACD are positive, and you're getting volume on that breakout. Let's go ahead and move on to some of the downgrades on the day. The first one that we can take a look at is a consumer stock. It's Boot Barn. This one had been holding up quite well. It's getting hit a little on the downgrade. This is Citigroup downgraded the stock, and we can see it really had been marking time for about 2 weeks. It's gapping down 5% on that downgrade. RSI is poised to turn negative, as is the MACD. You really have a lot of room here where it could easily drop down to that 31 level, and that's a 10% potential drop should we see continued distribution. And then another actually, this is a semiconductor stock that did get downgraded today. It is ASML, and we can see it had been holding in quite well. The downgrade really not hitting it as hard as you might expect. It's just in this trading range here. Stock holds in RSI, MACD, both in positive territory. And we can take a look at a couple of other. Hilton is one that I wanted to share with you. This stock really has been doing quite well. They're let's see if I can pull it up. HLT is the ticker symbol for Hilton. And they were downgraded last week as well. And look at this, the stock really is not responding. It's down almost at 0.5%. It's just shrugging off that downgrade. This is what you like to see in these leading stocks, stock finding support at this upward trending 10-day simple moving average. So really just marking time up here at these new highs. Oftentimes, analysts will downgrade stocks due to valuation, but when these stocks are at these high valuations, there are sound reasons for it. So Hilton does still look constructive here. I have time for one more downgrade. UBS downgraded General Electric. Now, this company's been trying to wake up, for lack of a better word. They did have this nice downtrend reversal in the beginning of the year. Since then, we've been very much in a trading range at about 11 as the high, 9.5 as the low. And so today it did get downgraded, not really responding much to the downgrade, but the stock is definitely in a go nowhere environment. You can tell that when these MACD just kind of gravitates to this net neutral, that's indicating a stock that is in a tight trading range. And that's it for upgrades and downgrades. And we will be right back.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Chicago, July 21st through 23rd, dozens of the most respected traders in the world, including Rick Santelli, John Najarian, Tom Sosnoff, Linda Raschke, and Ralph Acampora, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, commodities, forex, futures, and cryptocurrencies. Claim your free pass to join them at chicagotradersexpo.com.
All right, it is time for Monday setups. And of course, first we always check how everybody did. I was expecting to do well, and darn it, I did do very well. I don't even know what Tom did. I haven't even looked at that chart, but let's go ahead and look at Ring Central. And I have to say that last Monday, Mary Ellen and I were in studio together. And when the producers were in the process of making their pick, and she was helping out a little bit, they had picked Ring Central, only I had already picked it. So,
well, you had the microphone, so you...
I got credit for it too. But anyway, looking really great. And honestly, I still really like this stock. You know, we're at 123.51, haven't quite hit my target yet at 127. My stop, obviously, you know, I don't think I have to worry about that one. I would possibly consider, if you are in it, to, in the short term, maybe raise it to about 119, because I think you do have a pretty nice cushion there without getting stopped out. You're now looking at a possible flag. So I'm pretty happy with the pick, but let's see. Tom picked CMG at 746.53. Nice move. He did well too, it looks like, with 752.44 where we ended up. So nice breakout. It is pulling back a little bit on this current breakout, but notice the PMO. Wow, nice buy signal, still heading up. I have to say, I still like both of these. Let's go ahead and look at, as Tom always says, we're only as good as our last pick. So let's go ahead. I'm going to show you mine, and then I'm going to let Mary Ellen show you hers. All right, Copart, CPRT. We have got a nice move on that PMO. It's turning up. I did find all of these stocks just from my general PMO scan. There was a small handful, but I found it pretty easy to pick my 5 out of it. So if you want to know more about my PMO scan, you can find the link at the bottom of all the MarketWatchers live recaps, and of course at the bottom of all of my DecisionPoint articles as well. So nice breakout on this one. It is starting to settle down a little bit after that breakout here. And I like it. I think CPRT has some great potential. NVRO is the other one. Here we go. And actually that is in here. I don't think I got into annotating just yet. All right, so the PMO has been acting kind of, flat. Price in general, I have to say, looking at March, we're really mostly flat. But it looks like we're going to get a breakout. And on a short-term investment, I think this could be a good one. It's trading at the top of its range at the intraday high. I'm looking for it to break out above that area at about 66.50, I would say. And the target would be probably about $68. But I like these rising bottoms on the PMO. We are starting to see that turnaround. I would like to see the buy signal. That's why I didn't pick it this time around, just because it has been mostly flat on this PMO despite it the rising bottoms. But nice strong scooter. So it's got some really good intermediate to long-term strength, but we're looking at a very short-term one. So let's go ahead and move on to my next one. I'm going to do Planet Fitness next. All right, Planet Fitness. I know the PMO is acting a little bit fishy here. It looks like we did get that. You can see we haven't quite gotten that PMO positive crossover for the buy signal, but I like this nice strong scooter here. OBV is trying to rise. We're getting that breakout. The thing I liked about Planet Fitness is just, well, it has a 1.5% decline right now. I actually like that because we got that breakout on Friday. You can see in the short term, and now we're moving back to that breakout point. But right now we're still holding that 20-day EMA, and I would be looking for a bounce off of that. I think your upside potential is pretty good. The reason I didn't pick it was just the fact that the PMO is acting a little bit strange right now today in comparison to Friday, but I think it's still definitely worth a watch. WP Carey and Company. This one is a REIT, and I did seriously consider this as a pick, mainly because I'm feeling kind of bearish here in the short term, and these are, of course, Monday setups, very short-term trades. REITs tend to do better in a more bearish environment, but we are sitting right there at overhead resistance. So I kind of decided I didn't want to go for this one, but it would be worth a watch because look at that nice PMO moving out of that oversold territory above the zero line, plenty of room to move higher. This stock tends to have pretty clean crossovers. So I think if we get that crossover, to believe it. But my pick, and it was really kind of hard this week, but I went with OCTA. Mainly because I'm looking at this as a possible flag formation, and we are still trading mostly above that top that we had back in mid-June. The OBV looks really nice on the way up. Look at the accumulation going on here in July so far. Scooter value of 98.4. This has a lot of internal strength. Not a surprise when you see this sort of a move coming out of mid-November, really. Didn't have to wait for that a December low. In fact, it didn't even have a December low like we were looking at in the S&P 500. But I'm going with OKTA at 135.55. You're up, Mary Ellen. What do you got?
All right, it's in the books. And with that OKTA, I'll tell you that that's a computer software security stock. And we're seeing a couple of other names picking up here this week in that space. So you like to see group participation, of course, to confirm your potential uptrend in your stock. So let's get started. I have a few names that crossed my path that looked really quite interesting as potential setups. And this first one is Match.com. And for those of you not familiar, they offer online dating apps. And we can see that the stock is really setting up quite nicely. It's poised to break out of this 2-month base. The RSI is positive. Let's take a look down here. MACD had that nice positive crossover, black line up through the red, trending upward. Your longer term 50-day is also in an uptrend. So the stock, their company, is due to report in early August. But what I did want to point out is they did report back here. This is in early May. The company gapped up on strong earnings and continued to advance somewhat. Now, if you remember May, that was a super difficult period for the broader markets. Match.com bucked that downtrend. So really sitting up here quite nicely. I'm kind of talking myself into it, actually. But let's take a look at some of the other names that looked attractive going into today. And this next one is also a computer software stock. It is HubStop. And we can see it's not quite as dynamic looking, but I'll tell you, they have very strong earnings. The estimates are for 45% growth this year, 32% next year. What I like is analysts are revising estimates higher going into that earnings report. This is a little bit of a bigger view. What we see here is more recently, the stock has broken back up above this 50-day simple moving average. From my work, that's your line of demarcation, if you will. Once we break above that, the stock is freer to advance. And we can see that that RSI and MACD are also both positive. So I would keep this on your radar screen. The dynamics aren't quite there yet. Volume, I would like to see a little bit more of a pickup on volume, and this one could really begin to take off. And the next stock is a medical product stock. They're in the diabetes space. PODD is the ticker symbol, and it's Insulet Corp. And the stock has really been a big winner. The numbers on the company and on the earnings estimates are huge. It's a smaller stock. They're calling for 520% earnings growth this year. And then you can also note that next year 168% growth. So we can see this big, strong, super strong uptrend that the stock has been in, and it has a market cap of about 7 billion. So it's not terribly small. And we can see here more recently, it's actually been marking time in a bit of a trading range after this huge advance May into June. And your RSI is up here in good standing. It's up above that 50. Your MACD, now this is what happens to this MACD when a stock goes into a sideways consolidation type pattern. This MACD will drop. It's not concerning. It's still above this net neutral zero. So this uptrend is very much in place. The stock does tend to hover around this 10-day simple moving average. We can see it pulled back last Friday and is finding support. So it could very well be an entry point here today as the stock uptrend appears to be very much in place. JEC, I'm going to take you over to an industrial heavy construction. This is Jacobs Engineering, and we are again looking at a daily chart. And this is a stock that broke out of a 1-month base here, and it gapped up. Take a look at this volume, very construction, but very constructive looking. And we can see it's finding support at this upward trending 10-day simple moving average. This is another company where analysts are revising estimates higher into their earnings. And this is normally very constructive. It's what you want to see. And the stock is due to report in a couple of weeks, actually in about a month, the beginning of August. So we still have a little bit of time there, but generally this stock looks very constructive. It's broken out of yet a longer term base, appears poised to trade higher. Let's take a look at the stock that I chose for this week as looking most compelling. And this is Ciena. CIEN is the ticker symbol. The stock, the company did announce a buyout. They are in the telecom fiber optics space. This gap up here is all about huge earnings. The company came out with triple-digit year-over-year earnings growth, and the stock is still in the process of digesting this huge gap up. I would argue that it is forming the right side of a base, and this RSI, MACD are positive. If we get a breakout at 46, that would be even more constructive. But at this juncture, I like Ciena. Technology stocks are leading the markets higher, and look for this to do well.
Excellent. So which one's your pick?
Ciena, CIEN, you can 43.80.
Excellent. And for those of you watching live, go take the poll, because we will take a look at which Monday setup won among Mary Ellen, myself, and the producers. So it'll be interesting to see what you think about our Monday setups. All right, time to keep going. We're going to keep rolling here. Usually John Hopkins from Earnings Beats comes in, and Tom, and he talk about the, which companies are looking good on their high earnings, their strong earnings chart list. I thought we would go through and look at we'll look at some of the companies that are actually going to be reporting in the next, most of them tomorrow, and some of them the day after that. So many coming out. It does get juicy, I guess, if you want to call it that, as far as all the earnings coming in right now, Mary Ellen.
Yeah, absolutely. Did you want to go ahead and get started, or?
Actually, I'm going to let you go first. Is that
okay,
all right?
sounds great. Yeah.
All right.
So So what we've done is, in essence, cherry-picked some of the stocks that are due to report this week, and we can take a look at how they are. Generally speaking, you're not well served to buy stocks going right into earnings, but certainly if you own them, you have a cushion, if you will, you can certainly hold them. And what I wanted to do actually is start by showing a stock that reported last week that really fell under strong distribution following weak results. And the reason I'm pointing that out is simply because this is Illumina, ILMN, heavyweight biotech stock reported. Take a look at that gap down, huge volume. Two things I want to point out here. One is prior to the company's reporting, the stock was priced at an all-time high. So going into earnings, when you have that dynamic, the stock is what I call priced for perfection. Any type of flaw in that report, whether it's guidance, revenue falters, and so forth, you will see a gap, or oftentimes the price come under distribution. Now, this was a really significant gap down, about 18%. The second item that I did want to point out for those of you that maybe at the end of the day noted that it fell, you weren't following it super closely. When you see this huge volume, take a look at that volume bar relative to the rest of this history here. We're looking at a daily price chart. That's telling you that institutions do not like that number. They want out. And oftentimes, similar to what you're seeing, you'll see more further distribution. The stock is down another 1.2, 1.3%. So there are other examples that you can look at, but two key takeaways. One, stock's price for perfection going into earnings. And when it drops on big volume, you could very well see continued distribution. So let's take a look at some of these names. Go back to what is setting up for this week. Cognizant, CTSH. This one is not priced for perfection. Quite the opposite. We can see the stock. This is a gap down. And more recently, it has tried to reverse that downtrend, but we are not out of the woods. The stock, while it has been trending upward here, and in fact, this gap down was all about a negative release of earnings back here. So it is attempting to reverse, but we could very well find resistance at this 200-day simple moving averages. When you see your longer term 50 and 200-day, in this case, red is 50-day, blue is 200, when they are trending downward, that creates a very heavy pattern. We can go back here so that your downtrend reversals will very easily get met with resistance. We can see back here this earlier reversal faltered at that 200-day before falling again. So not very constructive looking there. Let's take a look at eBay. This stock is due to report soon. And this is a company that is going through a lot of very constructive changes as far as their marketing channels, leaving out the middleman. This particular, we're looking again at a daily chart, we can see the stock is really just marking time. It's base building in a very tight, flat base trading range. They're due to report on Wednesday, and analysts are optimistic with this company as well. It's another dynamic where you want to see the estimates being revised upward going into earnings. My only really looking at this, the stock is very close to that all-time high in price. Good news, it's been marking time. It's not marching to new highs going into earnings, but net, we are at new highs. So, but again, optimistic analysts, Wall Street, are looking for a good report. Let's take a look at UAL. This is United Airlines, and this company is due to report tomorrow. And we can see that the stock has been really in a very confirmed uptrend going into the report. A number of these airline stock, they pay attention to load factors. They want to see flights that are full. Load factors are coming in high. Let me just take you back to a company that reported last week. This is Delta Airlines. This is their report. Take a look at that gap up. They came out with very good numbers. And oftentimes when that occurs, you'll see a dynamic where other stocks in the group also start trending upward in anticipation. And that's what we are seeing here. The stock is just poised to break out, but tomorrow is the report. It looks very, very positive. So it will be interesting to see how they come in. One last company that we can look at is a smaller bank stocks. A number of the larger bank stocks Citigroup came out today. We're seeing JP Morgan this week. They are going to be coming out, but this is commerce bank shares, and these regional banks have not been picking up. A lot of the action in these banks is centered around interest rates. We've seen the fact that interest rates may be lowered is stalling a lot of these stocks. So today the stock is down almost 2%. Now your RSI is trending downward and your MACD is poised to turn negative. And one area when you're looking at these smaller banks, these regional banks, sometimes these ETFs, taking a look at how they're performing can give you a sense. This is KRE, the regional banking ETF. It's down almost 2% today. So these banking stocks, while they were starting to perk up, are appearing to fall back to their old non-performing ways, if you will. So those are stocks in the earnings spotlight.
All righty, let me take a few as well. And if you have anything to add, I am all ears.
Sure.
Okay, we looked at JP Morgan actually earlier in the show, so I'm going to go ahead and peek at Johnson and Johnson. And of course, this is in the healthcare space, which is still somewhat defensive. I thought this one was interesting. It is going into earnings tomorrow. At this point, I'm guessing that people aren't going to be really too happy about earnings when you see a Friday drop like this below that 200-day EMA and a close. PMO pretty much was already trending lower here, but just fell out of the sky as soon as we got that giant drop last.
And that drop, I'll tell you, it is because they are doing a criminal probe into J&J's talcum powder. That news came out on Friday, and so that's the reason for that.
That'll be interesting what happens with earnings there. All righty, excellent. Like I said, just popping in there. You are always the storyteller. You give me some of that stuff.
The background gal.
Yep, I'm the tech geek. You're the storyteller. All right, Prologis PLD is going to report, and again, this is in another somewhat defensive area of the market in real estate. And right now it may not look that enticing. I would be concerned about it, I must say. You've got a double top that is forming. It's not a double top, though, until we see a drop below that confirmation line at about $78, right there at the, a double top looks a lot like an M. So the center of that M, that's where I would be looking for a breakdown. But if it can hold that 50-day EMA and we maybe get some moves, some momentum to the upside on an earnings surprise or something, we always know that's why Tom doesn't hold into earnings, is because you just don't know. Do you, Mary Ellen?
You don't.
Good earnings,
there are clues. I have courses that tell you there are at least 5 clues as to whether companies will report ahead or below estimates, and I've been sharing some of those tidbits today.
Excellent. Yep. All right, let's go. Next one up I'm going to look at is CF. CF Industries. That's in the materials area. Let me make sure that sometimes I can't read my own writing, so I just want to make sure I have the right one. I believe I do here, CP or CF. So what we're looking at here, it's a material stock. It had broken out nicely last Friday. Really nice breakout from a declining tops trend line. Only caveat I have is $48. That overhead resistance is coming up pretty quick here in the short term. But look at that nice move on the scooter. And again, the scooter is weighted toward the intermediate and long terms. So that means we're seeing internal strength and relative strength here going into the intermediate to long term. PMO is turned up. So that's a short-term momentum shift that you want to see. I would look at this one as likely to break out to the upside here, maybe on those earnings reports. But, some nice accumulation going into earnings, I'd say.
Yeah, it is looking very attractive. No real news, but some of these agricultural stocks will respond weather related, or could be
Certainly. Domino's Pizza, please hold. Here we go with a nice move here, right to the bottom of this support level. Obviously, the PMO is still trending down. It's almost below zero. So, right now, fairly volatile and, going into earnings. So I would certainly be very, very careful of this one. I mean, we're already down 4%. I'm guessing that they're looking for not the best show on their earnings. And let's see, the next one I'll look at here is CSX. And we're looking at an industrial, the railroad area. And you can see that right now you could make a case here. I think it's more of a trading range, but you could make a case for a symmetrical triangle here. But honestly, I think it looks more like a trading range. Actually, let's clear those and show you the trading range here. There we go. And really, you could even bring it up higher if you wanted to include that overhead resistance there at that high. But I would be looking at this trading range right now. We're on our way back up to the top of it. I think it is positive that we didn't go down to test the bottom of this range. And again, you could probably look at that as another bottom for that range. But I think that looks pretty good, and it is on its way to the upside. Not sure what we're going to see out of it for earnings. The PMO is flat, not a surprise when you see this sort of price movement. So I would be suspect of this one.
Yeah, they're all about load factors and volume, traffic volume as well. And they've been a little late, these rail stocks. So it will be interesting to see if they come through.
Yep. Let's see, we have a little bit more time. A couple others that I had written down. IBM is one. We can add that to the list. All right. So, this one's really interesting. It's, in the computer services industry, and it has been on a really nice run since the end of May. And there's lots of clues. And Mary Ellen, you're right, with a lot of these stocks, the various indicators that we use will give you a lot of insight right away. Mm-hmm. And here you go. You've got the PMO turning up just a little bit before we started to see that upswing. We did have an upswing and the PMO had turned up, but we still didn't have a breakout from that declining tops trend line. And I have to say, I would have been a little bit concerned at this point to get in anyway, just because you had that 20 below the 50. But at this point, once you started to see price make that move, 20-day EMA started to cooperate. So interesting look at this one. I would say it's, we're not overbought. We're just about over that, leapfrogging over that overhead resistance from the middle of April. Volume, I like this accumulation going on in the very short term, but I think that this is promising without being too overbought. All righty. Progressive Insurance was another one I wanted to look at. Okay, property casualty, of course. And, nice little breakout right now. I think my only concern in the short term would be the pullback. But, as we always talk about, you kind of want to see that pullback on a breakout. So we got the breakout. I would have preferred a pullback would happen tomorrow. But tomorrow, I believe they do report their earnings. So it'll be interesting, again, to see where these go. I can see that overhead resistance was broken. And actually, if you look in the thumbnail here, we did get the breakout here in the very short term over this area right there. So maybe it isn't quite as available to the naked eye right there on that bar that we had Friday. But if you look back over here into the thumbnail, I think that looks pretty good. All right, that was our earnings spotlight. Here are the charts that we just went over, some of those symbols. And I think that we will have this, I know that we'll have this in the MarketWatchers live recap this evening. So if you wanted to go back over some of those symbols and look at them more closely, there you go. You'll be all ready. All right, time to move into the 10 and 10 already. I can't even.
Wow.
Uh, I know it's 10 minutes till. Okay, so the 10 and 10 to 1. And I know our first symbol is going to be service now. Let me go ahead and get that chart ready to go for us. NOW. There we are. Okay. So what we're going to do here is Mary Ellen is going to feed me some of those stock requests that you all had in the chat room.
Being
And
that it's a lunchtime show, I will feed you the stocks.
that's right, exactly. Okay, so here we go on the ServiceNow chart. The 10 and 10, the whole point is to annotate these charts in 10 minutes, 10 of them. I'm not always that good about staying within that time frame, but I will annotate these and I'm going to then immediately save them into our MarketWatchers live chart list so you can actually get access to them almost as soon as I save them. So let's go ahead. Do we have a rising trend channel? Indeed, we do. I do that drag right there just so that I can see if this is a wedge or if this is a rising trend channel, because it's sometimes very hard to see. So if you line up your rising bottoms trend line and you're clicking on it, you hold down, I think, I know for the Macs, it's the control key or the Apple command key. So I suspect it's the control key for the IBM. But excellent way to look at those. Rising trend channel right now, I would look at this. We had a pretty good breakout right there. And we're holding up, we're holding it. I would look for prices to continue to rise. That's a really nice rise going on in the PMO. OBV volume is looking pretty good. The only thing I could say that would really bother me about this is if you look in that thumbnail, OBV tops have declined while price has moved up. Price generally follows volume. You want to see volume on these moves to the upside, and that really counts as participation. All right, let's put this in our date.
Okay.
And then, like I said, they will be right, so you can see I'm saving them right into that MarketWatchers live chart list.
Very good. The next one is Micron Technology. It's either, depending on how you quantify it, it's either data storage or a semiconductor. So
All right, I can't right off the, is it Micron? Is the
Oh, MU, sorry.
Yeah. Oh gosh, of course.
Mm-hmm.
I don't know where my brain is today.
Okay,
It happens, doesn't it? Okay, so let's go ahead and we'll put this right into the annotation tool, handy dandy auto support resistance line. And if you draw it off of this intraday high back here in April, we still have poked right up above that overhead resistance. I would say I would drag this down just a little bit more to encompass this top and kind of that top as well. And that would tell me that we are pretty much trading above that overhead resistance, but right now it's still trying to decide which way it wants to go. I like the movement on this PMO, on the buy signal. If I were holding this, if I were holding it, I'd continue to hold it. We have that 20-day EMA crossing right above the 50-day EMA, and I would look for continued breakout. Possible target, I might go back here to the top we saw back here in August. That's what I'm going to put on that. I don't think I would be buying in here unless I could see it really hold above this area of overhead resistance that it is trying very hard to break through.
Great. And then the next stock is a name we've talked about in the past. It's Roku. The ticker is ROKU.
Yes. And this has been quite a darling, I would say, among many. I've always been kind of suspect of it. It performs well. I'm not going to say that's bad, but I always wondered how they would really make a business out of just selling those, the set-top sticks. We've got Amazon Fire, you have Apple TV, a lot of competition there, and are they branching out into anything else that I maybe am missing here?
No, but they are starting to be able to monetize their platform.
Mhm.
So there is good news ahead.
All right, so here is your support level. If I were holding it in the shorter term, I would probably dump it if you got below that 20-day EMA. If you're holding this in the intermediate term, it would, of course, determine when I got in, but I would be using that $85 range as my stop on an intermediate term investment. We're still seeing a PMO above zero. As an intermediate term investor, the volume is still looking good. And oh my goodness, 99.9 as your scooter rank. I would have to say right now, Roku is looking pretty good, maybe forming a flag, but I don't like it how it's rounding off. That looks more like a rounded top to me.
Very good. The next one's having a tough day today, YETI.
Yeti.
Yeah.
All right. Oh, yes, not so good today. And that's, in all honesty, I'm going to look at this. The PMO really didn't give you much warning on this one. We had a very clean PMO buy signal come through. And look at the volume here. It was really suggesting we wouldn't see something like this as far as a pullback. But maybe this is your opportunity now to get in. I would look at this area as support with our tops back here in June and May. The 50-day EMA could act as a place to get in. If you look at the rising bottoms trend line, we haven't actually had the breakdown yet. And I would consider that fairly positive. Let's just make it a little more green. But rising bottoms trend line, that means, of course, that it is still in a rising trend. And that would tell me I need to hold it if I were in it. The short-term investment, depending on where you got in, I would have to say, if you got in here at these lows back here, I would probably take the money and run if we can't hold that 20-day EMA or that $80 level, especially when I see the turnover of the PMO there. But like I said, OBV and PMO were not that helpful on this one.
Okay, next one is BLD is the ticker symbol.
All righty. All right. Okay. Trading range is my first thought when I look at it. Right there. And it's pretty much staying in it. And let's face it, guys, it's at the top of that range. I do see that PMO buy signal. And I don't know if this came up in a scan for somebody. I see that signal and I don't trust it based on the fact it is in this trading channel and it has failed to get above that overhead resistance and is continuing to pull back. So I'm not really a fan of this in the short term or the intermediate term. But again, if I had bought it a while back in an intermediate term investment, I mean, if you look at the weekly chart, I can guarantee that's a bull flag. So you could very easily hold on to that.
Very good. The next one, FLDM, Fluidigm.
Fluidigm. Oops. Make the fingers work properly. Wow. Wow. I hope somebody's shorting it right now. I would not look at this as a buy candidate myself. 20 is just crossed below that 50-day EMA, which is not good. Look at this, has been in a declining trend since that top earlier. Let's make this red. Declining trend right there. And those tops really match up fairly well there. So when I see something like that, I would be concerned. However, I guess if you want to look at it in the short term and draw the bottom of a wedge, you sure could do that. But, we're losing that support level. I think that is very important. And the PMO hasn't done anything and it's actually making lower lows. So that would be a problem for me too with this one. If I'm holding it, I'd probably cut my losses. And I don't think I would even consider buying this until the PMO started to at least make a move, decelerate at least, but turn up is what I would want to see more so. But, hoping on a falling wedge like that, I don't think would be wise.
Okay, next one is hitting a new high. It's Live Nation, LYV. All those concert goers supporting the
Oh,
stock.
yes, I'm very familiar. I bought plenty of ticket from them.
You're supporting the cause.
Indeed. I really want to see the Rolling Stones coming up here at the Rose Bowl, but anyway, we'll see how that goes. Maybe I can get some nice wins on my cash account, and then we can go.
There you go. There you go.
All right, so it's had a nice breakout here. PMO is rising nicely. You know, at this point, if I were holding it, keep holding it. There's just nothing here to be concerned about. Look at that nice scooter going on here, and it has been, I mean, strong for quite some time. I'll go ahead and make that and make it solid. Oh, no, there we go. Let's do that. So anyway, you can see the scooter has been reacting very well. And right now with that move to the upside, we're not even that overbought as far as momentum goes. I would look for it to continue higher. If you really wanted to get in now, I think the time has really passed, sort of. Sort of. That's a technical term. We've been backing up here toward that $68 range. That would have been the short-term entry, I would say. If it holds 70, you know, I could see making 70 an entry point here on this one and looking for a move to, you know, to continue higher. I'd have to look at a weekly chart to know exactly, and I'll pop that in for you guys real quick because I have a handy dandy chart style for that. Right. So on the weekly chart, you got the PMO buy signal, and we're breaking out to new all-time highs on Live Nation. So I think that one looks pretty good.
Very good. Yeah, certainly in a strong uptrend. Next one, aerospace defense stock, LHX.
Okay. Oh, this is the one Tom had picked a while back as his Monday setup.
Oh.
Yeah, and obviously, I mean, it was, I think he got it back in here, LHX. It was right after the L3 Harris Company merge. Yeah. The PMO, okay, okay, if I'm holding this, I would have to say I'd be a little bit concerned. And here's why. That PMO in the very short term has turned down below the signal line. Of course, that is definitely don't want to see that. We hadn't quite gotten the buy signal, but you know, in all honesty, guys, you know me, I would buy it on that move to the upside. I think that's, you know, that's where I'm looking. I want to see that change in momentum and a little bit of a continuation on that momentum. If you got in here as that PMO was turning, I think you still have some time to hold on to it. You know, the 185 level looks like a good stopping point. If you had gotten in down back here at that 175 range, if you got in back here, I think it's still a good hold, but I would watch that PMO. If it ends up in negative territory, I would be a bit concerned. I'll go ahead and mark that overhead resistance. And there you go for the support level. Notice that we did have, and I think that was very interesting, we did have a double top here come in off of that rise. The expectation was a drop right here of the size of the pattern. The drop would have been, the expectation would have been a little bit lower where that support level came in, but certainly, you know, it executed, unfortunately, on the big drop down on that little price shock, but and it didn't continue lower. It started back up. I think that was, you know, certainly would make me a bit optimistic there to get in at that low, right at that support level. But now it's starting to look a little dicey for me.
Okay. And the next one is Radian Group, RDN. They are a mortgage related company.
All righty.
And I believe that is our last one.
Oh, okay, good. We did, well, we made pretty good time here.
I'd agree. You did very well, or you will.
By the end of the week, I'm going to be an expert since he's gone all week long. All right, so there, you know, you were looking at this short-term top. You know, I'm looking at how the effect of that level, and it really didn't an effective support line or overhead resistance line. One thing you can do, and let me see if I can make this work here. I'm still gonna edit it a little bit more, guys. But I wanted to show you the overlay, because sometimes when the price action isn't really matching up to some of the tops and the lows, one thing you can do to figure out where that support level might be or that overhead resistance is to do the volume by price overlay. And it gives you at each price level where the volume was highest. So if you notice here at that top, the volume bar, while it was, it was out there, it was certainly not the same as what came up back here. So I'm going to go ahead and annotate what I'm talking about. And since the last one, I know I got a little bit of time. Let's take this right there. So since that one didn't match up so well, I'm going to just take right in here to the middle of that volume by price bar. Notice it does line up with these short-term tops and bottoms and the 50-day EMA. So that didn't make a whole lot of sense, but one way to make sense of it, I find, is to use that volume by price overlay. And that does conclude the 10 and 10. Let's see, these are the symbols that we'll have those up that I just annotated. Look for them in the MarketWatchers live chart list right now. You can go right there and see some of those charts that I did just annotate. All right, we'll be back.
Well done, Erin.
It's yeah, you talk a lot. Tom does a beautiful job of this. Like I said, I appreciate him more and more every time I have to fill in for him. So Mary Ellen, you'll be back with that final market update after this short break.
The point of on trend is to keep you on the right side of the trend. Mostly dealing with stocks and ETFs, I'm going to point out bullish setups on stocks and ETFs that are in uptrends. I'm also going to look at some downtrends, but those are designed also to tell you which stocks and ETFs to stay away from. The main point is to stay on the right side of the trend, the uptrend.
And welcome back. We're going to go ahead with our final market update. And we can see, looking at the market overview here, the markets are certainly flat. We're not seeing a lot of direction either way. What I like to do when looking at the broader markets and where the strength may be popping up is take a look at these top 10 movers in the S&P 500 by percent change, and oftentimes you will see a bit of a theme. I talked about Gilead being up today on analyst upgrades. We can see that INCY, another biotech stock, and then also it's been updated, but REGN was in there. So we may be seeing a little bit of the biotechs picking themselves up off the mat after last week's decimation, for lack of a better word, but they really did get hit hard last week. So then we can go over to the market summary page, again from StockCharts.com, and really just kind of drill down. I'm on the prowl for areas that are green, that are potentially picking up with an eye toward further down for the rest of the week. Erin talked about this. We're seeing these defensive areas. It's real estate, utilities, and also consumer staples are in the green relative to other areas, but we are also seeing healthcare. So let's go ahead and take this down a little bit further. And sure enough, we can see BTK, biotech stocks are up 1%. Now, this is a riskier area of the market, these biotech stocks. So from my work, ETF for biotechs would be more compelling. Let's take another view of the broader markets. This is that candle glance view with various sectors and ETFs as well as the broader markets. I've gone ahead, added an RSI indicator, and then from here I am going to sort that descending. I want to see where the strength is. Now, this is a longer term view. This is not just today. And we can see, some of you may be surprised, but consumer discretionary stocks up here in the forefront. A lot of that has to do with Amazon. That's a big heavyweight. Stock was up over 3% last week. But there are other pockets of retail that are picking up well that would be worth a look at very closely. Technology, I've mentioned this earlier, tech stocks are certainly leading the charge, but for the most part, all of these indices and ETFs are mostly flat for the week, but we are seeing that drop in financials when we talked about those regional banks, and this is concerning. We are going into earnings season. Oftentimes, uh, well, every time, bank stocks are the first companies to report, and oftentimes they will kind of create a path for the rest of that earnings season. So not healthy that we're seeing a drop in financials going into their reports, but we will, of course, keep an eye out for that. And that is the market update.
All right, excellent. I'm going to go ahead and just move right on into the sentiment report. I do these every Monday, and what we do look at is I look at all the polls. I look at what is going on in the active money managers, how exposed they are. I look at money flows. I look at the market timers sentiment. And then I always finish up my update with the VIX and gold sentiment, because I find the VIX to be an excellent, excellent short-term sentiment indicator. So we will go ahead and take a peek at all of those. So I'm going to take us back to our charts, and there we go. First one up is the put call ratio. Now, last week when we looked at this chart, we had topped and the put call ratio is beginning to fall. That's pretty, that's very bearish because typically when you see these tops on the put call ratio, you start to see a decline coming after that and while it moves lower. But now we saw that it has popped a little bit up here. We got a little pop to the upside. Still very overbought though. And when I see overbought readings on the put call ratios, I start to look for a decline in the market. So I would say that very bearish right now, looking at that put call ratio. And again, I do invert my scales. I know everybody gets tired of hearing me about it, but the reason I do is, to me, overbought is at the top and oversold is at the bottom. And if I keep switching it back and forth, I'm going to lose my mind. So I invert them. And like I said, when we start seeing those ratios move to the top of the range, or in this case, lower and lower numbers, that's when people are getting especially bullish, and we want to look for the opposite in the market. Sentiment works that way. It's the bandwagon theory. Everybody jumps on the bandwagon. Everybody is a bull. You start seeing magazine articles. Once all of those things happen, you need to be prepared for a price reversal. And so that's why I give you this sentiment report. Now, just like seasonality with Tom, this is not my primary indicators. It's more of a tool in the toolbox to give me some background on what I'm looking at in my other charts. All right, next up is the investors sentiment poll from AAII, the American Association of Individual Investors. And these, the people who take this poll are just your average investors. I'm sure money market managers take it and everybody else, but if you go to their website, you just click if you're a bull or a bear, or you're neutral. And so what I watch is this ratio between the amount of bulls to bears. Right now, I'm noticing a continued increase here in the number of bulls. Now, granted, we didn't move that much higher from last week, but look at what happened with the bears. We saw a great deal of pullback here on the bearish reading. And that tells me that, of course, what's happening with the bandwagon. These bears are jumping on the bandwagon to the bullish side. So I would be looking again, I think this is showing bearish, but when you look at that ratio, the bull bear ratio, it's really not extended. When it's sitting at 1, of course, that means we have an even amount of bulls and bears. When it starts to rise a bit, that of course means we're getting more bulls into the equation than the bears. And so when you get up here to a 2, when you have a 2-to-1 ratio, twice as many bulls as bears, you really know things are extended. And of course, you can see an even larger disparity back here from the beginning, end of 2018 to the beginning of 2018. So we were highly, highly bullish here back right before the big decline. So that's the reason I think sentiment is really a worthwhile indicators to pay attention to. Okay, let's go ahead and we'll move forward to the next sentiment chart. This is the National Association of Active Investment Managers. These are the guys who manage those portfolios, and they're part of this organization. They report how exposed they are to the market. And currently, exposure is continuing to rise. And I would say that it is somewhat overbought at this point. Of course, there are readings that we've seen that have been higher, but overall, readings are generally much lower than this. So I'm looking at it as somewhat overbought, somewhat bullish as far as what's going on with these money managers. I think they could get more exposed to the market to make this a little bit more bearish as far as the picture goes. But overall, I'd say this is a bearish indicator right now. So we're getting that rise. Granted, like I said, we are not that overbought in the reading or that extended in the reading. So I think it could move higher. But I think this is giving us a clue that investors, mainly in this case, looking at this chart, they're starting to expose themselves more to the markets and that risk, and that tells me they're feeling pretty bullish. And like I said, bearish in sentiment, bearish for the markets because of sentiment being contrarian. All righty, let's look at the Wall Street Sentiment Survey. And with the Wall Street Sentiment Survey, you can find information about this at wallstreetsentiment.com. My friend Mark Young handles this particular survey. He emails a group of market timers, including myself, a very static pool, I must say. He doesn't, once you're in, you're pretty much in, and he doesn't add people. He will only, I guess, sort of like the S&P 500, you lose one, and then he's going to go ahead and add one. But this is really a pretty static pool of the same people. So I think it's a great indicator to look at. And one thing you need to know about the Wall Street Sentiment Chart is that this is a very short-term outlook on the market. When we get the survey, it is, are you bullish or bearish going into the next week? Basically, is the market going to close higher or lower, or are you neutral? I went in this week as a bear. I guess fewer people are bearish right now, but I am. Of course, looking at all-time highs coming up, I know that could be suspect, but I'm going to look at the VIX shortly, and I'll give you my reasonings. But we're getting a rise in the bulls, a pullback on the bears. The ratio isn't up to that 2-to-1 level, but it is elevated. I would look at this chart as far as the market timers are concerned as bearish for the market. All right, we're going to look at the RIDEX chart. And there we are. What I saw when I looked in the thumbnail is an increase in investment in bear funds, a mostly flat reading on money markets. They're not really leaving money markets per se. It's staying about flat, but we're seeing an increase in equities to the long side here with the bull and sector funds. So my indication here, looking just in the thumbnail, is that some money has been taken from those money markets. But the interesting part is the fact that mainly investors want to be in the market, whether it's on the bearish side or the bullish side. They want to participate right now. And that to me is a little bit concerning, because that means, granted, we're getting that increase in bear funds, but to me, people are a little bit more bullish. They're certainly not as frightened when they both enter on both sides. And so because of that, I'm looking at this chart as mostly neutral, but I would lean it to the bear side as well. All right, the ultra short-term indicators, and then we'll look at gold sentiment and summarize. What I am looking at, and on Fridays, DecisionPoint does their show at 1:30 Pacific, 4:30 Eastern time. And we look at this chart. I look at it often during the week in the blogs. Carl looks at it every Friday. But what we noticed when we got the readings during the show, we're seeing that increase in the net advance declines. We're not really, particularly, I would say they're not particularly climactic readings, but they are increasing. The bullish readings are increasing. And since they haven't really had spiked to that climactic level just yet, I think we still have some room where we could see another day or two of upside. But here's the problem, and that is the VIX. And again, I do invert it because to me, when people are very complacent, that means they're bullish. So the low readings on the VIX are sentiment readings. When people are feeling especially complacent or not as worried about the market, that's generally not good for the market, and people get surprised. And then we see that move to the upside as far as the readings on the VIX, and that means people are getting more and more nervous and more nervous. So when you see the tops on the VIX, typically you're going to see movement to the downside. And then when you get these bottoms or those punctures of the bottom of the Bollinger Band, that's when you should start looking for some movement to the upside. Now we had that poke right there above the upper Bollinger Band back earlier in July, and we've started to see a little bit of a pullback. Now the interesting thing is people are complacent, and of course the market can still rise while people are complacent because, well, of course, people are complacent and they do want to still be in the market. And that's, of course, what I was noticing on the RIDEX ratio and on the RIDEX cash flow chart. So we're seeing that move to the downside now on the VIX. That tells me that I could expect a little bit more downside. I think the fact we're getting these moves to the upside, we're setting up for a buying exhaustion. So I'm looking for a buying exhaustion. I think that this is bearish for the market. And then let's go ahead and look at gold. Oh, I wanted to look at the weekly chart. That's right. Okay, I think this tells really a much better story. We got the big breakout on gold. We got the rally. Everybody was bullish on gold. I mean, even Tom Bowley was actually considered gold a pretty good investment. And usually he's the opposite of a gold bug. So what I'm noting here as far as the sentiment goes is a lowering in the discounts. And the discount is determined by taking that closed fund, the physical gold premium, the Sprott Physical Gold Trust, and then looking at the discounts or the premiums based on what people are paying for the Sprott Gold Trust versus what it's actually holding and the value thereof. So as we see the discounts moving lower and lower, that means that we're seeing the bullish feelings moving higher, because if the discounts are going down, people are willing to pay for that fund at that higher level, even though it's not as discounted as high as it was previously. What we're really going to be looking for, though, are these premiums. And we haven't seen that. And when you look at this reading, it's almost the same moving across. We've got the buy signal, but I love seeing this flag forming on gold. I still think gold is a performer. I think we're going to still see a bounce here. I'm not looking for a breakdown back into this, trading range that we've seen multi-years. I think this is now our support level. The question is, can we get over that 1450 level at that top? I think it's possible. I really do. All right, so let me go ahead and summarize what we have looked at here on sentiment. And basically, we've got the put-call ratio rising in overbought territory. I think that's still bearish for the market because it is overbought. We saw in the AAII poll a drop in the bears, not much of an increase in bulls, but overall, people feeling more bullish. So that is bearish for the market. The exposure by the money managers is overbought. We don't have extreme readings at this point, but certainly we're seeing higher exposure than we've seen in quite some time, and that would be bearish for the market. Wall Street Sentiment Survey is bearish, a lot rise in bulls, drop in the bears, so that's of course what that would mean. And the right-X ratio, neutral to bearish for the market. Fewer in that money market, more people interested in being in the market. And I think that's somewhat bearish. Breadth and VIX, increase in the VIX prices. You saw the price rise on Friday. On that price rise, I'm feeling somewhat bearish going into this week. And gold sentiment, we are looking at neutral to bullish for gold as far as the discounts. That is all I have for our sentiment report. Whew. I think it is time to finally look at that poll. I'm going to let you talk for just a minute and tell me what you think about what's going on in the poll.
In the poll.
Mhm.
Okay. Yeah, so these are the stocks that we reviewed, and Erin, you got the audience on your side.
That's usually very unusual. Believe it or not, I usually hit the bottom couple.
Interesting.
I don't know.
I've heard Tom say there are reverse indicators, but Sienna is the second pick, and then we go down from there. And very interestingly, because I liked your view on OKTA as well, it's in a very vibrant area of the market that's picking up. So
Yeah.
we'll see. We'll see next Monday. Is that right?
Yes, we will. I think, I don't know if you're going to be in for Tom at that point. We'll probably know more soon.
True.
All right. Yeah, I'm very pleased to see my pick at the top. I think it was at the top last week. Maybe I'm starting to find those charts that even though they've been, I think the problem is, Mary Ellen, when I pick these charts, I truly am a momentum trader in that I need to see that positive momentum swing
Sure.
already occurring. And so
yeah,
sometimes, the rally is run. And a lot of people may not think that it can run further, but I pick it because I think it can.
That's right. You have that wind behind your sails.
Exactly.
Momentum.
Exactly. Man, I'm enjoyed my day with you though today. Did you want to?
Yes.
Did you have some? I think you were telling me some interesting factoids.
Yeah, I don't know where we were with time, but today is Prime Day, better known as Christmas in July. Amazon, a lot of really deep discounts, but CNET came out and pointed out some of the weirder or stranger deals that Amazon is offering. And I don't know if anyone recognizes this is Kobe Bryant, and he is telling us about a deodorant that is scented like victory. Victory scented deodorant. So
Yeah.
you can rush on over there.
I guess buy that for your man.
That's it. That's it. Have the smell of victory around you endlessly. This is another one. It's called Rick and Morty, the Pickle Rick game. And it's a card game. It follows Rick around as he attempts to escape from a heavily guarded Russian compound. So this could be your next happy hour activity. This is Aroma Putty. It's similar to Silly Putty, but it's for adults. And it smells good. It's supposed to be assist in relaxation. So there's that. And then I think we have maybe
One more.
Okay. This is Jake. He is the jumping Yorkie. For those of you that do not want to be bothered with having to feed and walk your dog, you can have this cute little Yorkie come and jump all over you. It's a battery operated, lovely little toy.
Well, away we go. It is time to leave. There is our upcoming schedule. And I do want to thank all of you for being with us today. Please remember to complete that survey as you exit. We read every single comment. Just go there to the right of your viewer. And we do love to get that feedback, truly. As a quick reminder, MarketWatchers does air live 5 days a week, Mondays through Fridays from noon to 1:30 Eastern. I would like to say have a great afternoon, everyone, and I hope we'll see you back here tomorrow. Happy trading.